Today is October 17th, okay, about 1 week ago, exactly 6 days ago, China's Minister of Finance did a press conference. And in the press conference, he conveyed a very important message, which I do not think many of my friends, including those overseas, have picked up, okay? What is the message? The message is the following, that the Chinese central government is now considering issuing a huge amount of central government debt, using the revenue from the central government debt to buy out local government debt, and then give cash to local governments. Okay, this is super important. Okay, why this is important? Because this is exactly the problem of the Chinese macroeconomy. The Chinese local governments overall have accumulated around 100% of GDP in the amount of local public debt. And with such a huge amount of public debt, they did lots of long-term infrastructure projects, including city parks, including highways, including railroad stations, including airports. These infrastructure projects will take 20, 30, 40 years to turn into higher tax revenue down the road. However, local governments are now pushed to pay back this huge amount of debt, including the principal and the interest, in the coming 5 to 6 years, which is impossible, mission impossible, which is suicidal. That's why local governments have been trying very hard to delay their payments to their service providers, the contractors, delay their payments to some of their employees. How much? About 8% to 10% of GDP has been delayed in delayed payment in these forms. Okay, so no wonder the Chinese economy is growing below its potential. No wonder the nominal GDP only grew at the pace of 4.1% in the first half of this year, which is the lowest nominal GDP growth rate of the Chinese economy in the past 45 years, except for 2020, the first year of the pandemic. Okay, so finally, the central government is now realized that this is the problem. So the solution we have been proposing, I've been proposing for many years, is this: central government issuing debt, swapping out local debt, okay, extending the maturity of this debt, okay, because central government can roll over their debt, okay. Now, of course, you may ask, does Chinese central government have enough capacity to issue 20 to 30 to 50% of GDP in the amount of central government debt? Yes, they do have, because central government in China, arguably, I would argue strongly, is by far the richest central government in the world, okay, having lots of shares of listed companies in the stock market, and they have a lot of assets in other forms, including mining rights, okay. So this is the right way to do, okay, right away. If the central government can do this, this does not increase the deficit of the budget deficit of the central government, because this is a capital account. This is a capital account operation. This is not the sudden increase of current expenditure. This is the increase in debt, and using that to buy out local government assets, which is in the form of local debt. Okay, if this is done, this is an immediate fiscal stimulus to the economy. Okay, as I mentioned, as much as 10% of GDP is in the form of delayed payments by local governments. Okay, so let's hope these policies will be implemented very soon. Okay, next step is National People's Congress. The Standing Committee of National People's Congress, NPC, will hold this meeting at the end of October. They will discuss this issue most likely, and if they approve this increased amount of central government debt, then we will see that the capital market in China will get a new boost in their confidence. So overall, this is a good direction of move. Okay, although details are yet to come out. Okay, let's hope, let's watch, let's follow this up carefully. Okay, so thank you very much. I hope you find this piece of information useful and interesting.